When I started in the industry, there was no, hey, let us teach you how to prospect, let us show you how to build a leads list. It was go out, get appointments. You won't screw up the insurance because we have an office full of people here that will help you on the insurance side, but you're the sales guy. You need to go generate opportunities.
Whereas a lot of agents were saying, hey, I can save you 30%. I was able to say, here's why I can save you 30%.
We're able to provide not just the individual company information, but also broad market information, who's doing well, who's not doing well, and compare and contrast so that the producer can go in educated and with more information than anybody else and make an impression.
You don't even have to wait for a claim. If you're dealing with contractors, all you have to do is ask them about their audit or ask them about how they get certificates of insurance. And you're going to find out really quick they're probably not that happy. One of the benefits that Florida has is we have a lot of access to information publicly that you just aren't going to get in other states. And so I feel like, we're spoiled a little bit from that regard as far as what we can pull, but it still requires a massive manual process in order to do that. I'm a big believer in knowing what my hourly rate is. And for what you guys charge a month, that's not even a business decision for me. If all I did was use Insurance X-Date for a day, I've already saved myself a multiple of what it would cost me an opportunity cost of spending my time to go do that stuff when you already do it for me. Producers are infighting even inside the own agency. They're worried about, who's going to steal leads and do this or do that. What's up, everybody? Welcome to the Power Producers Podcast, where we are refining and redefining the sales game. And one of the ways we do that is bring you creative solutions to get rid of the mundane tasks that you don't want to have to be doing from an administrative standpoint and get you out on the streets to knock down doors or to dial phones till you have blisters on your fingers, focusing on top line revenue. Today, we have got two very special guests. We have Rob Gifford and Dan Abercrombie from Insurance X-Dates. And if you're a commercial producer and you haven't heard of them, please let me know what cave you're living in. I'd like to go there and unplug for vacation sometime. But I have a feeling the majority of you have heard of who these guys are. And so today, we're going to dig a little deeper into their story, talk about how they got to where they're at right now. What was their idea behind launching this product? And then maybe they'll give us a little insight into a roadmap for the future. But I've not heard these guys on anybody else's podcast. I really don't even listen to podcasts, including my own, that much. But it'll be good for me in a selfish way just to unpack the conversation and find out where things are headed. So, fellas, welcome to the podcast. Glad to have you on here.
Thanks, David. Good to be here.
Absolutely. So let me tell you this. I mean, obviously, there's like a unwritten podcast credo that everybody has to kind of give their verbal bio before we can really get down to brass tacks. So, Rob, why don't we start with you quick and just sort of give your background and kind of you guys interact however you want with what got you to where you're at right now.
Sounds good. Yeah. So I got my start in commercial insurance as an intern back in 2004 to date myself. It was mid-size commercial agency. They were a scratch agency, first generation. So it started with an internship and ended in an acquisition. It was like 2012, 2013, I guess. But long story short, getting started in the commercial insurance industry when I did, I was 21 years old. And everything that one thing a 21-year-old lacks is credibility. So I was really good on the phones. However, when it came to face-to-face thing, I was getting weird looks. So I essentially, I had the same pitch as everyone else when it came to cold calling, when, getting in the door. Where I was able to differentiate myself and what I would say is a big part of our product today is utilizing the rate filings. Pennsylvania, which is the primary market that I sold in, Philadelphia area, it's very competitive. Carrier rate filings are readily available. So I would spend my Saturdays cross-referencing a business database with the rate filings, look up the carrier, all that stuff. And then I would have my prospecting list for the week. And whereas a lot of agents were saying, hey, I can save you 30%, I was able to say, here's why I can save you 30%. So at least in my mind, and I think it, just looking at the results, it helped me build a little bit of credibility walking in the door. So then, as years passed and I finally got some real world experience, it was a good transition basically.
Yeah, I think you have what those of us in Florida lick our chops for, man. I mean, we have state administered pricing, so no loss cost multipliers, no filed rates or anything like that. Which, I think a lot of people look at that as, oh man, it makes comp so much harder to sell or it's so much harder to compete. The reality is, and I say this all the time, at some point I'm going to say it enough to where agents are going to actually listen, but I think that a lot of agencies have just given up on comp here, specifically, um, not meaning they won't write it, but they're just not going to try and lead with it because if they can't, they're so accustomed to selling on price that if there's no price advantage, let me go to auto, let me go to GL, which are also, getting hammered with rate increases. So is Umbrella for that matter in Florida. And we can really try and control your pricing there as opposed to going in and really understanding what drives the overall cost of the program, not the premium, but the costs associated and the risk profile on the accounts and all of that stuff. So like most things, when everybody else goes right, I want to go left. To me, the workers' comp policy is 6 pages long. The experience mod is a mathematical formula that if you can learn it and understand it and be able to go in and articulate, here's where you're at, this is what's average, and here's what your minimum mod is. And the difference between where you're at and your minimum is your controllable, which is how many dollars you're leaving on the table. I don't care if you're 12. If you can go in and explain that math to somebody, you're going to instantly have credibility. And so I get 100% what you're saying, man. You and I got into the industry at around the same time. I'm just 10 years older than you are. So at 31, I was in the industry in '04, and I was still struggling with the fact that I'm meeting with guys that are, and ladies that are 55, 60, 65 years old, been in their chair for 30 years. What in the world are they going to listen to me talk about? And meanwhile, they have no clue that I'm new to the industry. It was all in my head for the most part, but I can imagine, being 21 and having to go in and call on a controller or a CFO as opposed to somebody who's closer to your age and more along your lines of experience in the working world at that point. It's daunting. You have to have every tool that you can possibly have, if nothing else, to give yourself the self-confidence that what you have is right. And then if you can go in and deliver the message with that level of confidence, it really doesn't matter what the age is at that point. People are going to see through it and they're going to be, okay, yeah, this guy knows what he's talking about.
And yeah, like comp was definitely like, crutch isn't the right word, but I knowing the way workers' comp works, it is, of the commercial lines of coverage, it's the simplest coverage in my opinion. I mean, you can't really get it wrong. So yeah, it was, for me, it was certainly the little wedge that was in the door, just to get started. But yeah, I guess that would, like, just to transition to how I met Dan. Like I said, our agency was acquired. It was a bank-owned acquisition. First Niagara, they're no longer around. I think it's KeyBank now. But in any event, us and the myself and the other producers, we always had the idea. We had a basic resource for business information. It was called QMod. That was like the data lister of our area. I'm sure you probably heard of data lister, LexisNexis. So, it was a decent enough resource, but it obviously, was lacking in a few areas. Number one, carrier info, and number two, that rate information. So our IT guy, he got canned, obviously, during the acquisition. He and I, had conversed a number of times because we were pretty friendly, kind of got started on the idea. Didn't have a name yet, didn't have the name Insurance X date yet. But just kind of over the course of a year, things got a little squirrely. Kind of just never heard from him again. Luckily, I met Dan through a mutual friend, and we just kind of hit it off, got chatting, and I'll let Dan kind of take it from there, give you a little bit of his background.
Yeah. So I've been starting, excuse me, I've been starting and running website businesses since high school. I was selling essays in high school and college online.
I used the service when I was in college. Yeah.
Then started another business with partnered with my dad on an idea he had that did really well. Had a few other things, tried a few things, failed, but yeah, that came to meet Rob and was ready for a new project. Knew nothing about insurance. Uh, no more now than I ever care to admit, I guess. But yeah, it's been a fun 10 years putting this together and seeing where it'll go.
Yeah, I
The
think sometimes the lack of insurance knowledge is actually a benefit to you, man. You don't let
Yeah,
it cloud you, you know?
yeah, it brings a new perspective, that's for sure. Like asking different questions. You know, Rob and I definitely have a good uh, interactions with like analyzing the data because we have so much data, and Rob's able to really parse through uh, and find new things to learn from the data. And you know, the back and forth between us helps us get there.
and then Dan can actually make something out of it. is,
Yeah.
is the nice thing because, like, when it comes to the coding, the programming, um, yeah, I mean, knowing something exists or knowing that it's there is one thing, but being able to turn it into something electronic, something that can be a search filter or a signal. That's it all comes down to the execution. It's like,
Yeah.
and that's what makes things work. Um, but
So
yeah,
what
I don't know. Dan said he's failed a few. Maybe he has failed a few times, but he's definitely succeeded more, more than failed, I'd say.
well, and the thing is, man, I don't know of any entrepreneur that hasn't we
That's
can
how you
use
learn.
we can use the term failed. I mean, as long as you learn something, I don't think anything's a failure along the way. It's just a life experience at that point. And I do feel like that the more, obviously the more you screw up, the closer you're getting to figuring it out. Some people get lucky and they figure it out the first time, but then there's people like me and Dan that have to have a few, snags along the way to figure things out. But, um, you know, so let me ask you this, because I think it's interesting. I work with a lot of producers across the country at this point in Killing Commercial, and our group is unique relative to my experience in that they're 100% collaborative, completely open, willing to share everything we're doing, tech stack, sales tactics, everything, which is what makes it such an awesome community to be involved in. That's not been my experience in working in other agencies aside from my own. Most of the time, you know, producers are infighting even inside the own agency. They're worried about, who's going to steal leads and do this or do that. So I guess my question is, as a producer, what made you, in understanding you're not producing anymore, right? Like you're not involved in an agency at
Oh,
all.
right.
Um,
No.
what led you to share this with everybody when you had a really good mousetrap that you could have just kept to yourself? Obviously, it has turned into a successful business model for you, but you couldn't have predicted that in the beginning.
So I mean, the concept, and like I said, it was, when I was a producer, a lot of my Saturdays were kind of spent, looking up the carrier info, cross-referencing the rate filings. Um, when we got started on this business, my first thought was, well, this thing's going to sell itself. So as being the sales arm of what is now Insurance X Date, I should be on Easy Street. Turns out that was not the case. And looking back on it, there's a few reasons I can see why. Number one, like I might have mentioned already, we nothing like we were nothing like we are today. I mean, we started in I think we just started in one state. We quickly moved
Yeah.
into New Jersey and Delaware because similar market and similar handling of the data. Um, but that said, I mean, this is it's something that required a full-time sales effort, a lot of trade shows. Actually used our site, used Insurance X Date as my CRM for the first 2 or so years, maybe even 3. I find the agency on the system. I'd call them through the system. And then when we're doing the demo, I'm like, look, here's me using our product as a CRM. So, not only, it's, I guess that's another thing. We're not just, there's a lot that we do software side that is just purely geared toward productivity, primarily just saving time. Like we all have to make sales calls. We all put our pants on one leg at a time. If you got to do that 50 times a day, the seconds add up into minutes, into hours. What can we do to eliminate that sort of thing? But I guess to finally answer your question, I wasn't affiliated with any agency at that point. It was actually very important that I wasn't, I guess, just because of the contract that I had to sign as an employee with First Niagara. So yeah, that's kind of one of the many reasons that I wasn't using it as a secret weapon.
Yeah, I mean, I would say, selling the picks and shovels or doing the actual mining, but also scaling an agency versus scaling a SaaS business. I think scaling a SaaS business makes more sense than trying to scale an agency nationwide, that type of thing.
It wasn't like a non-consideration. Another entrepreneurial friend of ours, we had met a couple of times, just passively, just discuss the idea. And I guess, by that point, there was plenty of traction. The promise was there for what our product was. And I mean, there also, again, we weren't the first to market in that regard. There was always kind of somebody there, like I said, QMod was the data lister of our region. And I think the two never really overlapped or competed against one another, mainly because of the way the markets run. Data lister is very prominent in the NCCI states, and then QMod was just this local backyard kind of provider, really. So yeah, hope that answers your question.
Yeah, I mean, look, I've said it before. I think that look, when I started in the industry, there was no, hey, let us teach you how to prospect, let us show you how to build a leads list. It was go out, get appointments. You won't screw up the insurance because we have an office full of people here that will help you on the insurance side, but you're the sales guy. You need to go generate opportunities. And I didn't have a deep Rolodex, man. I mean, I grew up down here, but I had been living in Birmingham for the decade prior and really hadn't lived in the Tampa area since my junior year of high school, right before we relocated up to West Virginia, where I graduated. And so my first probably 3 or 4 months literally was building my pipeline, doing the research, all of the things that, I would think any salesperson in any industry would want to do if they wanted to be successful. And you have to balance that. That takes time. We joked about it a little bit. I talk about it when I speak publicly, but yours was Saturdays. Mine wasn't. Mine was every night until 12 or 1 o'clock in the morning. And, we didn't have 2 and 3 monitors back then. I had a laptop and I had multiple browser tabs open, going to AM Best, going to NCCI, using Reference USA for free with my library card to pull leads and get demographic information from there, and literally would have 12 to 15 tabs of a browser open with an Excel spreadsheet that had the names of the prospects. But then my goal was to go in and fill in all of the individual cells with that information. And you have to balance that with production pressure. When I went into the agency, I was hired at what is now an extremely well-known and successful firm on the national scale. When back then we were Baldwin Insurance Group and there were like 7 of us. Now they're the Baldwin companies in a multi-billion-dollar publicly traded company on NASDAQ. And, it goes to show that it doesn't matter the size, shape, or level of experience of the organization. Resources are not easy to come by when you're starting out in this industry, regardless of where you're starting. And so, I had leadership beating on me. When are you going to produce? I said, guys, you gave me a year. You told me what I had. I play the long game. I could go out and probably write every candle shop in 3 zip codes if that's what you want. But if I'm going to build sustained organic growth in a book of business over the rest of my career, I can't build it without a foundation. And that foundation is having a well thought out business plan, number one, with a pipeline to support that of qualified leads and prospects. And it was interesting then because we had Chubb, and Chubb was not an easy contract to get at the time. And Chubb had property capacity, and property wasn't easy to get at the time. And so, from an insurance perspective, it was really easy for me to sell Chubb because I could just say, look, they're not always the cheapest, they're not always the most expensive, but they're always here. They haven't pulled out of Florida. And I found out what their appetite was. I knew that they wanted masonry, non-combustible construction 2 miles or more from the water that was built in 1996 or newer. And at this point, it was '04 or '05. And so I decided I needed to find out where I could find those buildings and what classes they wanted. They wanted light manufacturing and Department of Defense contractors and technology and life sciences. And so I focused on light manufacturing, and I found out that in Hillsborough County, which is the Tampa side of the bay, and Pinellas County, which is the Clearwater St. Pete side of the bay, that if you were a manufacturer, you had to purchase an occupational license, and that record was recorded at the tax collector office. So if I went in and found I could just go in and export a list of everyone who had an occupational license for manufacturing. And that's actually what became the basis for my pipeline at the time. And so if the next step, obviously, was to go to I shouldn't say obviously, because there's a lot of you that are newer producers out here who don't know to do this, but so now you will. And then you can say obviously when you're sharing the story with somebody else. But I went to the property appraiser's website. I went company by company, used their address, looked up the property, and if they had masonry, non-combustible construction, they were 2 miles or more from the water. I had a real easy shtick to go in because I was going to be able to walk in with an admitted market property quote with a carrier that had, I don't want to say restricted distribution, but probably limited based on the number of agencies that could actually represent them directly. And to be truthful, it was like shooting fish in a barrel. So what was 3 months worth of me taking time to build this database, this pipeline of exactly who we wanted, that we knew our carriers would write, that literally all I had to do was get past a gatekeeper or have a conversation with somebody. Closing the business was not difficult at all because I had something that other people didn't. Market softens a little bit, the game changes, right? And then here we are again. I don't even know what you would classify what we're going through right now because it was a hard market. And then we had 3 hurricanes come through in the span of a month and a half down here. So, at some point when the market softened and property wasn't to play, we pushed over and said, you know what, let's talk about something a lot of other people aren't. Let's go in and really go deep and learn workers' comp. Let's learn the experience mod. And to your point, it's not, I don't think it's overly difficult. I don't think that you can really screw it up. It's statutory. Like there's no really real room for interpretation and as far as what the rules are or any of that. And so that became kind of the platform that when I launched Florida Risk 8 years ago, that's what I wanted to do. And I joke about it because I was a fan of Xywave at the time. I want to be very clear. I'm not a fan of Xywave anymore. I don't endorse them in any way, shape, or form. And please don't mistake that, anybody listening to this. But I'm going to tell you a story because I think it'll resonate. But when I launched, I only had so much money, man. And it was me by myself in the dining room of my home. And I joke and say that my first 2 employees were Modmaster and Broker Briefcase because I knew that if I could go out and have the diagnosis, but then also present the treatment plan for what we were going to do when we engaged from a risk management perspective, that ultimately I would sell enough deals to where I could bring in the people that I needed to surround myself with prior to, as opposed to bringing them in and then trying to sell my way to make payroll every other week, right? Which is not the role that I wanted to play at that time. So that's kind of how we shifted into the workers' comp thing. And, we talked about it a little bit before we started recording, one of the benefits that Florida has is we have a lot of access to information publicly that you just aren't going to get in other states. And so I feel like, we're spoiled a little bit from that regard as far as what we can pull, but it still requires a massive manual process in order to do that. And so, I think that when you find people like yourselves who have the ability to take that browser tab with the 12 to 15 tabs and the spreadsheet and all of the different places you're going and looking and aggregate that into a cohesive dashboard where you're literally looking at a client record by client record, and you're basically getting the same information that you need to have an educated phone call to try and even just set an appointment. There's no reason why I wouldn't do that, because what took me 3 months to build, I have at my fingertips today.
And that's really like I think what it does boil down to. Yeah, were you gonna? I'm sorry.
Yeah, I mean, information is power, and we're able to provide not just the individual company information, but also broad market information, who's doing well, who's not doing well, and compare and contrast, so that the producer can go in educated and with more information than anybody else, and make an impression
without being overloaded or yes, I've heard it kind of discussed. I think a bit on your podcast, but the kind of information overload, doing a little too, maybe it's call reluctance, maybe you're trying to see if they had a news article about them, but it's like, well, are you going to go commenting about the new, some news article you read about them, or do you want to kind of get down to the insurance information? Like that's what's really
well.
relevant.
And you know what, to your point, man, like I'm a creature of habit. Every single morning when I wake up, before I even go get my first cup of coffee, I do two things. I read the Tampa Bay Business Journal email edition that comes to me, where I can click to see if I want to go read full articles on anything, so that I can kind of track what's going on with different companies that I'm following here. And then I go spend, 20, 30 minutes interacting on LinkedIn just to get the algorithm juiced up for the day so that we can get traffic flowing. But, when I read the business journal, I never reach out to those people right now, because everybody's reaching out to them right now. I'm going to get lost in a sea of other producers that are leveraging the good fortune of that prospect for getting published to meet their own self-serving needs. And for me, I'd rather just play it cool and wait, 2 or 3 months, set a task and say, hey, I just was going to touch base. I saw the article a few months back in the Business Journal. Figured you were getting inundated with calls from people. I'd let the dust die down a little bit, because I actually have a message for you that's somewhat important, and go from that angle. And it's been successful for me to do that. The other thing that I'll do sometimes is and I've talked about this in my first book, I will take that Business Journal article and have it. I've got a lady who does, and you guys will see this soon enough when you get your swag boxes, but that does all of the swag stuff for the agency, the podcast, and everything else that I do. And I'll take that article and we'll print it on glass and give them a 3D mount that they can put in their lobby. And just that'll be a drop off gift. If we're going to go do a marketing drop or whatever, we'll go and give them a gift to commemorate that. But you can be sure that it says presented by Florida Risk Partners on there. So if they hang it in their lobby, that I'm going to get free advertisement, and also put my competition on notice that I'm involved in some way, while we're in there. But I think that there's a lot to that. And I think LinkedIn Navigator, does that. I don't know that I've ever really talked to very many people that pay for LinkedIn Premium and actually use it the way that they should. But I think that they're onto something with that tool, because, I'm only reading the Business Journal. They're giving, current events that have these companies and these people that you're following from multiple media publications. And I think, to your point, there's so much out there that you really can drown in the data, you can get drowned in the information. And I think that when you aren't confident in your message as a producer, you tend to over talk to try and prove that you belong in the room, and you lose the prospect because you're just not succinct in your approach. And, If I were up north, I would know loss cost multipliers of every single underwriting company for every single carrier. And I would probably prospect that way, if not the rate filings, just simply targeting people who are buying their comp through a payroll company that are doing it one time, getting ignored. And then I would use that as my entry point and leverage it into representing them on all lines. But, I would be very focused in my approach. And I think that's one of the things that's really difficult as producers are younger and trying to find their way, is balancing what's enough information to talk about versus too much, and what's the right stuff to talk about.
Yeah, because I think, really what you're, at least in my opinion, and I guess in my mentality, with this information, I would be looking for questions to ask. Once you get past the gatekeeper, once you're speaking to a decision maker or an influencer, there shouldn't be a lot of one-way talking. It should be a lot of questions. I mean, as an insurance agent, you're trying to learn about their risk, their processes, how they manage their operations and their risk, and what the business's MO is, what their operational style is, and especially for a younger producer. I mean, I struggle to find a lot of words that a young producer could say to a business owner that's really going to sink in or sway them in any way. But asking good questions, taking good notes, making interpretations, that's, to me, how the sales, how a prospective buyer warms up to their prospective salesperson. Dave, I do want to kind of circle back real quick. You were talking about the market. Hard market, soft market. I was curious. I'd say the sentiment has been, still hard, on a little bit of banter we get on our demos and stuff like that. But, I was curious to pick it at, your impression on it right now a little bit
I
more.
think that the comp market, I can only speak to Florida because we don't write outside of Florida unless it's an incidental that has something to do with a company that's domiciled in the Tampa area. The comp market here is incredibly soft and has been for a while, but it's probably the softest that it's been in the 20 years that I've been in the industry. The property market was actually turning. It was turning back to starting to soften up a little bit right before the storms hit this summer. And I mean, that was kind of the thing. We're all sitting back holding our breath, hoping that we're not going to have a bad storm season, because we saw light at the end of the tunnel. We started seeing more capacity and better rates on the personal line side, which my agency does not do a ton of. But even on the commercial side, the benchmark that I use is I had a renewal that was a May renewal that was it is a metal, a non-combustible metal building that's a feed manufacturer that was constructed in 1958. It's less than 5 miles from the water, and I got a flat renewal this year. Like, I was blown away that I got a flat renewal. Last year it doubled, and I figured, based on what I was reading, what I was seeing everywhere in the marketplace, that this thing was going to come back and they were going to double or triple it again. And it would have put my client out of business. There's only so much margin for him to operate. And
Sure.
The property insurance is enough of a chunk of what he spends that if it were to double or triple, he's not going to be able to afford it. And it sucks. But I mean, that's literally what we face down here sometimes is, can you even afford to stay in business with insurance rates? The problem is that general liability, auto, and umbrella are probably as hard or harder than where the property market was. We're used to property being hard. We're not used
Sure.
to GL and auto and all of that following suit. So it's kind of like a perfect storm, which is one of the things I'm always really careful to say when I'm working with a producer, if I'm coaching them one-on-one or whatever else. You can't listen to premium numbers and revenue numbers when I talk and try and make that work where you live. You just have to understand that there's a conversion factor. If I go out and I write a manufacturing account that's $500,000 in premium here, I might go to Columbus, Ohio, and write an exact same size and shape manufacturing account, and all in it's 100 to 150,000 because they don't have comp, and the property rates and everything else are so much different. Auto is a great example. 3-4 years ago, we would be able to write if you were a clean account, F-150 would be $1,500 to $2,000 a unit. It's $7,000 to $10,000 a unit right now. And like we have clients that literally, I have a guy that it's a growing company, so he's added some units, but their auto insurance was like $60,000 4 years ago, and the renewal was $350 in a plumbing company, and I mean, I look at this more from a macro level sometimes too. You're taking plumbers and HVAC companies and electricians who are already having a hard enough time finding talent because we don't have people going through trade schools like we used to. So the labor force is already depleted with quality help. And then I have to say, sorry, guys, too many points on the license. You can't hire this person to drive for you. We're trying to control your auto premium. I mean, that's one factor. But, even on the GL side, so many water damage claims due to shoddy workmanship. One of the things we're focusing on as an agency, if we bring in a plumber or an HVAC company right now, one of the very first things that our risk management team does is begin to work through building a quality control program with them, so that we can not just help them reduce, and help them avoid claims activity by putting actual processes and procedures in place and then running their team through a learning management system to document that, but also to make that a material part of the submission to underwriting to say, hey, look, we get it. Plumbers suck right now. There's been too many water damage claims that are out there, and this is what our agency does. Every plumber that we bring in gets enrolled into a 12-week drip campaign, and every week they get a homework assignment and a lesson that they have to complete. Our risk management team follows through to make sure they actually do their homework and they complete it. And at the end of 12 weeks, we aggregate all of it together, and they have a quality control program with a manual and a training process for everybody that they bring in so that there's a common practice across the board. That gets the business placed. If we didn't go to that level, it would be really difficult to even get plumbers written. I mean, there's like 2 or 3 carriers right now that'll write them. Everybody else is like, we don't want to write plumbers. 4 years ago, everybody wanted plumbers.
Yeah, I was going to say, like, that is of the artisan contractors, I feel like that's one of the most lovable, if you will, for the
well, it's got all the right ingredients. You've got a fleet, you've got some decent GL premium, usually some decent comp premium. If they're doing commercial work, you're going to get an umbrella. There's just all of the things lined up that you could write, especially down here. If you're a plumbing contractor and you've got 8 or 9 vehicles, that's a $10,000 to $15,000 revenue account all day long by the time you write all lines, if not more at this point. So it's something we certainly targeted, especially the business to consumer plumbers that are running calls, warranty work, and all of that all day. But you pair that with the fact that some of the plaintiffs' attorneys firms down here got into the whole galvanized pipe thing, and there was class actions around that. And then there was a loophole somewhere on the homeowner's policy where people were getting repipes in their home done and getting it covered, and then it was subrogating back against, it was just, it's nuts. Like, every time you feel like you're making some forward headway, something else comes out of nowhere and just whacks you, and you got to go back and reinvent yourself. So, I mean, it's one of those things where consistency wins, but it's really hard to be consistent in your prospecting. And I mean, right now, one of the things that I caution every single agency, every producer, and the audience when I've spoken over the last couple of months is, right now you need to put the pedal to the metal and prospect harder. I hear every agency I talk to tell me that they're spending all this time on reshops, that everybody wants to be reshopped. Plus, they're having record numbers of inbound leads coming in, and they have to service all of these leads, when the reality is, at some point, the market will turn, and they're going to be left with no pipeline, no active prospects, because everything they've done has been, not that it's reactive to reshop, but you're preserving retention, number one. And the other thing is, look, I'm all about building good, solid inbound lead flow, but you can't control what's inbound. You can't control the person on the other end of the phone. You can't control who fills out your web form. And we want to try and make sure that we're helping as many people as we can. But at the same time, if you're an agency like ours and your real goal is to write accounts that are in the middle market and you've got 15 people a day calling in that are one-man handyman operations or a lady that's a cake decorator or whatever, and you're taking time away from building a pipeline to deal with that nonsense, you're only going to close about 10% of it anyhow because you're one of 7 agencies that they called on. You got to really figure out and get filters on what you're spending your time doing and block your calendar appropriately to allocate the right amount of time. I've had plenty of people say we don't need to prospect right now. And those are the same people that are going to be wondering how they're going to make payroll in another year or two when the market turns because they didn't invest the time now into making sure they perpetuate that growth moving forward. 25% across the board is not even a challenge at this point. That's rate. Like every one of us is growing as long as we retain our book. If all I did was renew everything I have, I'm going to grow 25 to 30% this year. And I think that that's a big distraction. And I think it's a false sense of security because I don't know of anybody that's been in the industry 20 years that can say if you just renew your book, you're going to grow 25% year over year. You have to continue prospecting. And that's one of the reasons why I think having a tool like yours to do that, so you're actually spending your time, moving the ball down the field as opposed to doing the research and trying to get everything aggregated into a dashboard, it makes a whole lot of sense, man. I mean, I'm a big believer in knowing what my hourly rate is. And for what you guys charge a month, that's not even a business decision for me. If all I did was use Insurance X-Date for a day, I've already saved myself a multiple of what it would cost me an opportunity cost of spending my time to go do that stuff when you already do it for me.
And that's, I think that really kind of hits, like, there's a few good points there. Like going back to the first one, I would say, or what kind of just jumped out in my mind is, I always looked at like this year's notes that I put in the system are next year's opportunities. I mean, maybe I don't get in this year, maybe I do, but like being able to call next year and say, hi, Joe, hi, Sally, we talked this time last year. You said I was too late to give you a call around now, maybe even this, something with some specificity. It just takes the chill out of the call. It's no longer a cold call. It's a a much warmer call. Secondarily, I get like another thing that when I first got into the industry, I would hear these horror stories of like what was considered a true hard market. Because I think I want to say, as I transitioned to a producer, end of 2004, going into 2005, it was still considered a pretty hard market. At least I would say most definitely, because my first, like I got lucky, like, didn't write anything for like the first 3 months and then the market softened and I had my foot in a lot of doors when the switch flipped, particularly like a really good underwriter with Harleysville. But yeah, like, they're telling me about businesses that had to shut their doors because, the cost of their vehicle fleet went through the roof and they literally can't afford to pay the premium, they can't stay afloat paying those premiums. Never really thought like, it's maybe there's a little exaggeration there, maybe not, but now seeing, the market that we're in now, a friend of mine, same time, around this time last year, he's heavy in property, $1 million account that is now $2 million. That was last year. A masonry contractor who's, auto and comp doubled, and he's either got to shut his doors or figure out another option. So that kind of, it's wild to see. One of the reasons I asked about that though is because we just start like payroll is a new data point in a handful of our states. So we also have premium in those states. So we've only got like a slice, about 1 quarter to look at right now. But we can now track, premium and payroll changes over time. So we've come up with a few kind of scores. Dan's worked on it a good little bit. I've just been evaluating, simple bar chart. The premium's gone up 5%, the payroll's gone up 3%. That would indicate that there is the rates are higher than they are relative to what they were last year. But then you can see it go the other way on other classes. So yeah, that's where my curiosity was. It's something, it's a new piece of data for us, so we're pretty excited to start, applying it analytically. It's something that's available now in those, of course, select states. Be nice to add something like that for Florida, but doesn't.
Don't see that happening.
Yeah. So let me ask you guys this. One of the things we talked about was utilization. What do you, if you were to give a producer advice that uses your product, what would you say is an underutilized tool right now that if you were a producer, you would be sure that you would use that portion of Insurance X Date because it would help you win more?
It sounds simple, but the click to dial. Sorry, I'm getting like a lot of feedback at the moment on. Is anyone else hearing that?
No,
Yeah,
you just got muted.
I know I muted you because I was trying to isolate where it was. Hold on.
Might be
Rob, it was Dan. Dan, I'm going to leave you on mute until it's ready for you to talk. We'll edit this part out, by the way. But yeah, it was a weird kind of feedback coming through. It almost sounded like a bug zapper or something.
Yeah, that's
Anyhow,
electric razor or anything like that.
yeah. Anyhow, go ahead, Rob.
But yeah, I mean, if I had to pick one feature, and I guess I would pick the click to dial, number one, because it's like one of our original features. And number two, it's the elimination of dialing a phone number. And that does assume that you have a VoIP phone connected to your computer. There is that caveat, but I mean, I I don't think we've spoken to anyone who doesn't utilize a VoIP phone system. And it's typically there's a setting or two, like I know with Zoom, we've used Ring Central in the past. There's something, some kind of checkbox you have to check on their setting menu. But yeah, that would be the big one. Where we're seeing some nice traction, and it's one of our newer features, actually probably our newest feature. We do have an email integration now. So the typical, you want to just send that, you leave a message or you speak to someone, they're like, yeah, send me XYZ. This is just essentially a template system in our, on Insurance X Date. Lets you from the interface just pull up a canned email and fire it off, move on to your next call. Again, it's just eliminating those few seconds or minutes of time, doing what all of us as salespeople do: send a one-off email, dial a phone number. It's when I say it out loud, it sounds very simple, but that's really
it does, man. And I mean, honestly, I think the job is simple. The problem is that it requires what I said before, consistency of doing what in some cases is the mundane every single day. It's just a matter of getting your reps in over and over and over again. And, it doesn't seem like that's all that exciting, but when you close the deal and get that big commission check, all of a sudden, all of that effort is validated. So that's interesting. I mean, I think that especially with the calling stuff, having the ability to click to call, knowing that you're operating with a VoIP that's recording that, and in our situation, automatically attaching it to the contact record inside of our CRM makes it easy for me. I spend a subset of my Friday afternoons just listening to producer calls to find out how they're doing on the phones, which ones went well, which ones didn't, and all of that. And I think that that's a great feature and certainly a time saver for sure. The other thing that I didn't mention when I was talking about needing to continue to prospect, right now is the best time to continue to prospect, because I feel like with everyone shopping and even taking the effort to go inbound and call you or fill out forms and things, far more people are answering the phones, far more people are receptive to conversation.
A lot more reception, yeah.
Why in the world would I wait until they're not to try and reach out to them if now's the opportunity? Like, I'd rather just take gasoline and pour it on the fire and keep going. Let me figure out how to get all the business onboarded and serviced. If that's the problem I have, I can promise you I'll solve it. What I don't want to be doing is wondering why we don't have that problem, because right now, we should be able to have more conversations than we've ever had before if our messaging's right.
And to that point, yeah, like one thing my bosses, the owners of the company, did a really good job of or just if nothing else, forcing me to understand is that I mean this insurance it changes every year. Just because they're happy this year doesn't mean they're going to be happy next year. Just be like claims happen, relationships sour. It's if now's the if to your everybody's receptive, like now's when you throw gasoline on the fire, because sure, you're not like they're not all worth working on, they're not all going to be good opportunities, but one day they might be. And now that you know the person's name, all you've got to do is spend a minute or two next year saying, hey Jim, we talked last year, how are things with your insurance coverage? Are you happy? Did you get that certificate for that job you needed? So on and so forth.
Everybody's happy until they're not.
Yeah.
And I mean, the reality is, and producers, I'm telling you exactly how you get beat on the streets every day. If you're about selling on premium and price instead of figuring out problems and solving them, you're always going to be at risk of losing that account, period. End of story. Because people are happy if they're paying relatively low premiums and, there's no friction there. But, to Rob's point, God forbid a claim happen. And the reality is you don't even have to wait for a claim. If you're dealing with contractors, all you have to do is ask them about their audit or ask them about how they get certificates of insurance. And you're going to find out really quick, they're probably not that happy. Oh yeah, well, the premiums are good, but now that you mention it, and I mean, that's the thing. If you know the areas to ask the questions around in these operations, because you're not trying to be all things to all people and you're really focused on specific classes of business, asking those fact-finding questions that turn into wedges is not that difficult. It really isn't. I mean, very rarely are you going to pick up the phone and dial, at least I can tell you in my experience, I'm not going to do this. I'm not going to call somebody who's already at their minimum mod. Like, I already know that I can help you make forward progress, or at least point out, that you're not where you could be because of whatever the reason may be, and have a conversation around that. I don't know of any business owner in today's climate that if they realize they're leaving 25 points on the table because nobody ever told them that their mod could be lower, why
Or
would they take that call?
So often I would, well, it's, the rates are set by the state. Like I would get that kind of response in Pennsylvania, where it is far from, I mean, like that's far from the truth. And they're with the state fund. Which I don't actually, I'm not like, does Florida have it? Yeah, you have
we have the JUA. I do not prospect out of it. I know people all over the country that go to like the the state fund and prospect companies out of the state fund that might not need to be in there anymore. But the people that are in the state fund in Florida need to be in the state fund. Like I'm not even going to waste my time going there.
Yeah, Pennsylvania is very much you could find a lot of diamonds in the rough in the PA state fund. But if you kind of looked over, New Jersey had what they call it the plan, is their it's essentially an assigned risk market for all intents and purposes. But yeah, just the way the market worked, if they were in the plan, they typically belonged in the plan. Yeah, state fund was a totally different story. It's also a lot more aggressive. Like they had as far as rate filings go, I don't know if you're familiar with like what you might call a standard LCM filing, but like national average is around 1.6, just looking at everything in aggregate. At that point, back in the 2000s, 2010, the state fund was like a 1.5. Nowadays I think it's up to a 3.7. Like it's where it should be nowadays. But yeah, it's like off the charts, relatively speaking. But yeah, it was actually like a competitive market essentially.
Well, and that's the thing, man. Like even in California, I'll have people all the time say, "Hey, help me work on this." They've got a really competitive quote from the state fund. I'm like, why is the state fund competing with open market workers' comp carriers? Like it's just so foreign to me, because that's not what it's designed for here. Down here, it's paper GCs, it's roofers that don't have safety programs. Like, I mean, it is what it is. You literally can't place it anywhere else. And I mean, it's really bad because we have so many PEOs down here that will take higher risk stuff too, that you really have to get through a lot of layers before you end up in the JUA. And that's one of the reasons why I don't even mess with it The other thing is it's such an arduous process to get all the paperwork filled out, and you're working for a fraction of the commission that
Yeah.
I can't take an account that needs a lot of help, that's going to require a lot of service from us, that is hard to even get the quotes for, and work for 3%. Like, it just, I'm not going to, and I don't even know that that's the number, so don't quote me on it, but it's something ridiculously low like that.
Yeah, the Pennsylvania State Fund is no, it's a net quote, no, no commission on it or anything. You have to plug it in yourself, or make the deal that you'll do it for free with the package, that sort of
Yeah.
thing.
It's crazy. Well, listen, guys, we've been going about an hour, and I've got another one stacked up ready to go. What have we missed we wanted to get out before we wrap up?
We have to talk about West Virginia sometime. I heard you mentioned it earlier, and I heard on one of your prior episodes you were talking about Summersville, the New River Gorge.
Oh yeah, I was up. Oh yeah, we were probably talking to Jim Matuga, the guy from Morgantown that has the AI product for storytelling. But no, so my junior year of high school, right before basketball season, we relocated from Tampa to Parkersburg, West Virginia, and that's ultimately where I graduated and then went to college and played baseball. And I was in Morgantown until 95. So I spent probably my most influential or easily influenced and formative years in West Virginia. So very fond memories, probably some wild memories that, don't translate to what I do today, but life experience, right, Dan? I mean, sometimes you got to stumble before you find it. But yeah, are you from there?
No, I'm not from there, but I similarly, I would say it's, the area has influenced me a lot. I rock climb.
Oh,
Um,
nice. So you've been out to like Cooper's Rock and those places?
oh yeah, yep. We were
Yeah.
just down in Summersville. My wife and I were down this past weekend
Yeah,
for
they had the Bridge Festival, right?
that was the week before, and we
Okay.
actually I've attended it a number of years. Try to avoid it now just because it's hard getting around. And we're there primarily to rock climb, but it is a spectacle watching those people jump off of that bridge. I mean,
Well, and it's
they
equally as fun to raft those rivers too, man. I've rafted the New River and the Gully both,
oh
and
yeah.
they're a blast.
Yeah, it is. So I actually I've rafted it once. I talked to rafters from New York when I'd rafted for like a bachelor party up in New York. Mentioned the area to them, and they're like that place. Explain how much of a mecca it is for rafting. And I was like, well, what's the difference? Because we just did class 5 up here, and they're like, well, it's like that all the time down there. And they're like, this is like winter runoff that we're getting. He's like, so it's like a 10 down there all the time.
Oh yeah, it's nuts.
And yeah,
Well,
I
the
mean,
Gully used to be, I'm sure it's probably hasn't changed any. It was only open for 3 weeks out of the year to raft.
so my understanding is I mean I think it's open the season now, but they do releases just about daily during the season. So yeah, they've got a good cache of water, and they roll it out for the economics, really, I guess. A big part of it is yeah, keeping
West
the
Virginia is probably one of the most beautiful states from a nature perspective that is probably honestly a really well kept secret, in my
I
opinion.
would agree.
But I would also say a lot of the crap you see in the movies actually happens. So
Very true. Yeah.
you need to balance that. I mean, I'll never forget my first day of class when I moved up there. I went to my 8 o'clock class, and there were literally like 6 to 8 pregnant girls in the class.
Oh,
And
geez.
that's just not something that you experienced in Tampa. It's like if you got pregnant in high school, you disappeared. It's like the mafia came and got you and you never came back. Like you had your baby, you went on and you lived your life, but nobody ever saw you in school again. I'll never forget this. I obviously date myself by saying it, but like there was a young lady that had her hand on her lower back shuffling over to the pencil sharpener, and I thought she was going to have her water break in the literally in the middle of class. And sure enough, like 2, 3 days later, she's gone. We don't see or hear from her. And then 8 weeks later, she's back in class, and she had the baby, and that was a normal thing. Like all the
Right back
time
to
that
the
happened.
grind.
And I'll never forget, I came home and I told he's like, what'd you think of school? I'm like, well, it's a little bit different. And he said, why? And he goes, well, you had a lot of other things to do in Florida to keep your attention. They don't have that much up here. So like, I think I'll find other things to keep myself occupied. I'm not really interested in starting my family at 16. So
Nope. Yeah,
crazy stuff. Well, listen, guys, I appreciate you taking time out of your schedule to come on. Thank you so much. I appreciate the innovation and the tool that you provide. I know I speak on behalf of a number of producers that already use your product. And for those of you who don't, I would highly recommend you check out insurancexdate.com. We'll put that link in the show notes when we put this thing out, and just see what these guys are doing. If you're spinning your wheels trying to build pipelines and leads lists and all of that, and organize it in a way that just makes sense and makes it easier for you to focus on getting the next deal done, as opposed to spending all your time digging through and researching and really, in many cases, making excuses as to why you can't call, then I think you should check it out and look at building your book, because it's a great foundation for you to do that with. So I appreciate you jumping on, fellas, and look forward to talking to you soon again in the near future.
Thanks, David. Likewise, definitely appreciate the invite, and definitely appreciate what you do. As I would, obviously when you reached out to us, wanted to listen to a few podcasts. I'm probably not unlike you. I don't listen to too many podcasts.
I got 4 kids, man. Like I have other things in my ear all the time besides.
I hear you. But no, I'm just blown away by how much number one, relevant and useful content you're able to put out. So, again, thanks for what you do, and thanks for having us on.
Absolutely. I'll catch you guys soon.
Take care, David.